If you're watching this video, you know you have an opportunity coming up as a first-time home buyer for California to give you 20% down to purchase your first home through the California Dream for All Shared Appreciation Loan. Now, this program actually released 3 years ago, and this was so popular that it ended up being fully reserved by that same weekend. And so in this video, I'll be going over the high-level requirements to qualify for this loan program, the ins and outs of it, the benefits of it, and also too as well, if you don't end up getting the voucher, what other resources do you have as a first-time home buyer? Hi, my name is Sunny Alcazar. I am with Neo Home Loans. I am a mortgage advisor. We are a certified lender with CalHFA, and we can originate these assistance programs for you. And so let's just hop right into the concept of the shared appreciation loan. So in this program, California is going to give you 20% down in exchange of 20% of your equity when you sell or when you refinance the home. Okay. And just a really high level concept based on the illustrations that they have on their website. And a lot of this information is found online at calhfa.ca.gov. And obviously, because you don't do mortgages for a living or read loan program guidelines for a living, I'm going to do my best to simplify it as much as possible so you understand whether or not you qualify for this program or you can actually take advantage of this program, right? And if the answer is yes, let's get your application in and also set up a Zoom call so that we can connect and hear more about your goals and get you one step closer to home ownership, okay? So when we look at their example of the shared appreciation loan, what they have here is they have a home valued at $500,000, right? And so they're giving you $100,000. You're taking out a first mortgage of $400,000, okay? And say 5 years later, that home is now worth $640,000. So it's increased in $140,000. And so what they're going to want is they're going to want $28,000 of that appreciation. And your homeowner's share of appreciation is actually $112,000. Okay. So when you look at the payback of the mortgage, right? So they want the original $128,000 that you receive. So that's after the interest that has been accumulated over time over the 5 years. Okay. And then they want their share of the equity. So there's about $142,000 in equity there. Okay. So essentially, your share of your equity is $112,000 plus your $30,000 mortgage paydown. So that's $142,000. While the Dream for All program, they get their original $100,000, and then they get $28,000. So it's a win-win situation. They get $128,000, and you guys got $142,000 in equity. That's amazing. When you see the numbers work out, you can see why this was very high demand when it first released. Okay. So let's go into the requirements. I'm going to go back to this screen here. And overall, essentially, their registration is going to open up from February 24th to March 16th. And us as the mortgage lender, we have to look at your credit, your income, and your assets and release a specific pre-approval letter to the Dream for All so that you can hop into this voucher portal and reserve your spot just to enter into the lottery. And more than likely after the 16th, they're going to announce or have a time frame when they announce the winners of whether you get it or not. And so there is a chance that you might not get the program, but guess what? Because if you meet these requirements with CalHFA for this particular loan program, you do meet the requirements of their other loan program. So here are the program requirements for the Dream for All specifically. One borrower must be a first-generation home buyer. One borrower must be a current resident of California. All borrowers must be first-time home buyers, okay? And they have income limits, meaning you can't make more than a certain amount of income for the specific county that you're looking to purchase in. Now let's look at their definition of first-generation home buyer. So their definition of first-generation home buyer is you can't have been on title or have held ownership interest or have been named on a mortgage to a home in no more than 7 years. Okay. Also, they want to make sure that your parents, whether biological or adoptive, does not have any present ownership interest in a home in the United States. Okay. And how they're going to do that is they're going to want the name of your parents when you register for the voucher. and they're going to want to see a birth certificate showing your relationship to that parent. Okay. So you could have not been on title or have ownership interest, in the past 7 years, but if your parent's a homeowner and are currently on title, this would disqualify you, right? Now, their definition of first-time home buyers, you can't have had owned a home for the past 3 years. Okay, so if you haven't owned a home in the past 3 years, you would fit the definition of a first-time home buyer. Now let's look at the last requirement, or one of the last requirements, which is income. And it's based on county. And I predominantly work out of San Diego County and serve a lot of my clients there. San Diego, you can't make no more than $207,000. Okay. Riverside, no more than 164. Orange, no more than 216. And then Los Angeles, no more than 168,000. So us as a lender, we still need to get an application. We still need to see your pay stubs. We still need to see your bank statements. We still need to check your credit, right? And we need to report income on that application. So long as your income does not exceed those limits per county, you can qualify for this specific program, right? Now let's look at another example of the Dream for All program. I have these scenarios prepared here in this screen. And so if you're looking to purchase a home for $600,000 and you were to use 5% down on a conventional 30-year fixed, your monthly payment is $43.58. That's principal, interest, property taxes, and homeowners insurance. Your cash to close is $55,674. Okay. And then you use the Dream for All program where they give you 20% down. You can see there's a difference of $700 in the monthly payment. It's huge. And then your cash to close is about half, so $23,680. Okay. And what's so exciting about this program is that actually, if you structure it with a 15% down payment, sure, you're going to have a slightly higher monthly payment, but you're still $525 less versus, doing 5% down. You actually can buy a $600,000 home with little to no money out of pocket. There's actually a negative number here, negative $5,375. Now, you can't get any money back from the loan. We're going to have to probably buy some additional points or prepay some HOA payments if there's an HOA payment, right? Because we have to use up all this money here, or make sure you maximize all of the loan, okay? But you can see that this is a pretty lucrative opportunity, and that's why it's a lottery, okay? And so when you look at the span of 10 years, and we're already factoring in the interest calculated on the additional loan, okay, that home was initially, $600,000. Just for the sake of this conversation, say the future value is $800,000. That's a different difference of $200,000. And so 20% share of that is $40,000. Say you sold either one of these two examples here, that is your gross. You just minus $40,000, and that's your net. So it's a win-win situation. No, and minus the, obviously the loan getting. I know this is already factoring in the loan. Okay, so you minus the $40,000 share. That's a tremendous amount of equity for you and your family, right? And that's why I'm a fan of CalHFA, is that a lot of their programs don't diminish the idea of home ownership. Okay. There's other assistance programs that'll give you the assistance, but they'll charge you the same note rate of your first mortgage. To me, that in that position, that takes away from being a homeowner, right? Now, if you don't qualify specifically, or if you don't get selected for the Dream for All program, they do have other additional loan programs available through CalHFA, which is the Cal Plus My Access and My Home, which can be paired with either one of their FHA, conventional, or VA loan products. Okay. And essentially, they will allow you to use both too as well. So My Home and My Access to cover a down payment and closing cost. And we can create a similar scenario where you're getting into a home with little to no money out of pocket, right? So I'm a huge fan of the Dream for All program. I'm a huge fan of CalHFA. This is an exciting opportunity, but it's also a limited opportunity. So we need to get the conversation going today and figure out, what does this mean for you and how does this pertain to you specifically? Let's get your application in. Let's schedule a time to hop on a Zoom call or a phone call. Would love to meet you and hear about your goals. Once again, this is Sunny Alcazar here, mortgage advisor with Neil Home Loans. We'll chat soon. Hope you found this video to be helpful. Take care. Bye.